Derek Halpenny, European Head of Global Markets Research at the Bank of Tokyo-Mitsubishi. Great to have you on the program. I'd like to kickstart the chat with this fantastic, lovely chart here, which shows the Italian-German 10-year spread and how it sort of evolved. This goes back to December 2014. You see a few spikes here and there, and then look at that, starting September all the way up, and then it's narrowed slightly since. Of course, if you were to take a longer range, that would be not as big as a spike as it currently looks. Italian elections, I mean, just as we thought we had recovered from the American political volatility, what's your top-line read on what's going on here?
Yeah, well, you know, I think the most important point to make on this is, yes, you know, in terms of Italy specifically, there are important implications in terms of which way the vote goes, in terms of the banking sector perhaps in particular, and the immediate outlook in terms of politics. But I think from a markets perspective, and certainly from the perspective of the forecasts that I'm setting for the major currencies, this is one piece of a potential jigsaw that's playing out at the moment. And it started this year, of course, with the Brexit vote. It then moved to the United States with the election of Trump. And if we get a no vote at the weekend and the Freedom Party candidate winning the presidential vote in Austria, it'll be another two examples of this populism, this wave of populism that is spreading throughout the world and has now clearly arrived in Europe. And what I mean in terms of the broader consequence, I think the crucial thing for Europe next year is the French presidential elections. And, you know, the idea of Marine Le Pen winning that election would be catastrophic for Europe. Now, the polls clearly show that's not going to happen, but if we get those examples of populism spreading...
Right, so that feeds into the theme, and we'll definitely pick up on that in a second. How do you trade all of this? I mean, how do you prepare for this kind of political volatility? I mean, we're seeing this is the spread, and this is one of the many indicators. We're seeing a lot of downside pressure as well on the euro. I mean, how do you tread these kinds of waters?
Well, in terms of trading that, I'd probably steer clear of it because, you know, one of the reasons why we've had the narrowing of the spread is this rumour this week that the ECB would be very active in buying Italian debt if there was a no result. And to me, that makes perfect sense. They're conducting quantitative easing and they want to keep the market stable. If there was any blowout, I'm sure the ECB would be in to try and contain the move. So that's probably not your trade. You know, euro lower is perhaps the trade to take on, but again, post-Trump, we've already had a pretty big move to the downside on euro-dollar. So, you know, to me, there's perhaps in the equity space, you know, I think there's opportunities there. And I suppose taking a broader approach, buying volatility is probably the obvious one, and I think there would certainly be an element of uncertainty that would create that volatility.
So you see this European populism spreading and continuing with that kind of momentum going forward? Because there was the other side of the argument, which made it clear that people are going to realize, you know what, populism is not that great, and way before the Eurozone even starts breaking out, that people are going to move back on that kind of sentiment.
Well, I'm not convinced on that, and I think, you know, the root of all of this, of course, is low economic growth. And if you want to point to a country in Europe for an example of that, there is no better example than Italy. And if you take real GDP peak growth levels before the great financial crisis, real GDP in Italy is about 7.5% below the pre-crisis peak. In the United States, for example, it's over 11% higher. In the UK, it's over 8% higher. So there's this real fundamental problem in Italy. And it's to do with debt. It's to do with the fact that they have to run these very large budget surpluses. Draghi this week mentioned the large budget surplus as being a positive for Italy in terms of reducing sovereign risk. I would argue it's actually one of the reasons why Italy has such significant problems on the growth side is because they have to run those budget surpluses to keep debt stable. And that's ultimately one of the big problems that Italy has.
Derek, we'll continue this conversation. Just a few breaking lines here hitting the Bloomberg.